What is going on, traders? Welcome back to the Traveling Trader. Are we on the verge of another crash? Is the saying sell in May and go away true? What should you do with your stocks right now? I will try to answer these incessant questions that I keep getting from you guys and contextualize what is going on in the market for you, because at the end of the day, the purpose of this channel is to provide you with support based on my perspective and the way that I see it. I'm only one man with an opinion. Doesn't mean I'm always right. However, in this situation, I do think that I've made enough videos talking about what I think will happen in the market during April and May, and those things are panning out. Obviously, nobody can time the market exactly, but I did say that April historically was the best month ever to trade stocks. If you were to pick one month and say this is the month that historically yields positive gains, it's April. And if you look at the S&P 500, the S&P 500 gained 6% in the month of April. And I said I think the average was around 5%. So we beat the average for April during the month of April 2021. In that same video where I talked about the best month for trading stocks being April, I also said that I expect there to be a retracement in May, because after all of the record earnings, or what we thought would be record earnings and turned out to be record earnings for the mega cap stocks, after that happens, what is the next catalyst that will lead the market higher? Well, there isn't none. Between then and the reopening will be a lull period. And as I stated before, April was the best month historically to invest in stocks, and we're up 5% alone in April. So I do think that the market has a chance to draw down back to the 50-day moving average on the S&P 500, which would play nice leading into the end of April, beginning of May earnings, where we can start another leg up and hopefully into the full reopening by summertime. So it only makes sense that we see some kind of retracement. Now, I'm also on record as saying I don't think the market will hit a bear market in 2021. 2022 is a different story. I think we are in for a world of hurt, because the Fed will likely have to raise interest rates to curb hyperinflation. And today we see Treasury Secretary Yellen, who used to be the Fed chair, saying that rates may have to raise a little bit in order to keep the economy from overheating. Now, luckily, she doesn't head the Fed anymore. This guy does, Jerome Powell. And Jerome said that we are not going to be raising rates, and we will let the economy run hot and see what happens in the summer, and that any inflation that we experience in 2021 is likely transitory. Now, should you sell in May and go away? Well, every market cycle is different. If you sold in May of 2020, you'd be kicking yourself in the ass right now, because 2020 was the best year that stocks ever had. However, based on what's going on in the market now, I do think that there is an argument to be made for at least tapering your buying in May and potentially taking this as an opportunity to rotate into more quality stocks. There are a lot of things going on right now, not only the inflation fears that I talked about earlier, but there are some supply chain shortages that are killing two major markets. The first one being the semiconductor market that really has reverberations throughout many sectors, including EVs, computers, obviously, crypto, gaming, etc. But the chip shortage is likely to last until 2023, says a top supplier in the auto industry. Another sector being killed by supply chain bottlenecks is solar. Solar is seeing a record demand right now, which is why I'm so bullish on a lot of solar stocks. But these companies can't keep up with that demand. A lot of the partners that some of these companies do business with are still hit hard by the pandemic. There are rising freight costs as well as rising energy costs. There's a whole host of factors. But anyway, solar is experiencing a supply chain bottleneck at the moment. So I'll give you some trade ideas in a second, but if we take a look at some historical data, looking at the S&P 500 going all the way back to 1958, you'll see that November through April, we yield an average return of 7.7%. If we annualize that, it's almost 16%. For May through October, we yield an average return of 2.6%. Annualize, it's 5.2%. So there is something to be said about sell in May, go away, at least from a historical data point perspective. So in the S&P 500 right now, I would not be surprised to see a retest of maybe the 50-day moving average, as I said in my April video. The NASDAQ is currently taking a beating, not able to really push past the highs that it saw in February, and creating this double top here, also going back to retest the 50-day moving average. And the Dow Jones looks toppy as well. Remember, the Dow Jones and the S&P still have not had a correction. The NASDAQ has. But here's why I'm not scared in the short term. If we take a look at the VIX, which measures the volatility, today it hit a high at the 100-day moving average, hit a high of around 22, but it fell almost 10% throughout the course of the day. Usually when we see these long wicks, the VIX tends to fall over the course of the coming days. Also, the economy is on record to record GDP growth for 2021. It would be extremely anomalous and just downright strange if we hit a bear market during those circumstances. So I don't think we're on the cusp of a bear market. Also, I've talked about this before. We've never not had a multi-year bear market in the US. We've never not had a multi-year bull market in the US, meaning that when the bull market starts, we've never not had it last for multiple years. All right, so what do I think you should do here with your portfolio? What stocks and options can we play? Well, every situation is different. Each of you has a different portfolio, but I'm on record as saying I do not think that this is the environment for high risk stocks and for penny stocks. Now, if you want to trade hyper growth stocks like Palantir maybe or NNDM, yes, I think there is room in your portfolio for those if you can get them at a good price. But I'm still of the belief that your portfolio should be made up of quality stocks that you have high conviction on. And a mix of recovery stocks / value / cyclicals plus mega cap growth is in your best interest over the long term. There's still a lot of recovery stocks that have great value right now. Look at Live Nation, ticker symbol LYV. Look at Disney, ticker symbol DIS. You have Wynn, which is WNN, Delta Airlines, DAL, Ford, ticker symbol F, NEO, which is still sitting at the 200-day moving average, Groupon, ticker symbol GRPN. These are all potential recovery plays that have a lot more room to grow. There are some stocks that have run too hot for my liking, like Booking.com or Booking Holdings. This is trading at much higher than it was before the pandemic. Same thing with Southwest Airlines, and business travel isn't even back on yet. I think buying into the chip shortage news is also good for the long term. So an ETF like SOXL, or you can invest in individual stocks like AMD or TSM. I think we can wait a bit on some of the mega caps like Apple and Microsoft. They have not drawn down low enough to entice me at least, but I have a lot of these stocks at a much lower cost basis. So for me, these prices aren't enticing enough. I would like to see them lower before I add to my portfolio. And lastly, look up how to sell covered calls, either a poor man's covered call or a covered call against your shares if you have 100 shares of a certain stock that you want to keep, but you expect there to be some stagnation in the future. If you sell a covered call, then you can recoup some of the money from the losses that you experience with that stock dropping or stagnating. I sold covered calls on NNDM, on Apple, on Facebook, etc. We also sold cash secured puts on Palantir, on Tesla, on NEO. This is a really easy way to make money when the stocks drop. And if you have no idea how to trade options, I did a whole options course from A to Z, starting with what is an option, ending with some of the more complex strategies like iron condors and vertical spreads, diagonals, cash secure puts, covered calls, etc. Check it out. Link is in the description below if you're interested. And if you want to sign up to our trading group, link is in the description below where I send out all of my trades. You can also buy inverse ETFs like the SQQQ, which is the inverse of the NASDAQ, SPXS, which is the inverse of the S&P. You can use these to hedge if you're holding a lot of NASDAQ or S&P based stocks. So I'll just wrap it up and tie it in a little pretty bow for you and give you a summary. I do think we will likely see a 5 to 10% drawdown in the indexes. Not only is this likely, but it is likely necessary to keep pushing significantly higher for the summer reopening and the full recovery trade thereafter. I think the Fed will have no choice but to raise rates in 2022, and that is when we could potentially see the beginnings of another bear market. But that doesn't mean we stop trading and investing. We just have to be aware of the circumstances surrounding the market conditions at the moment. Anyway, traders, that is it for this video. If you got anything out of this video, leave it a big fat thumbs up just like this. Leave it in the comment section below. Let me know what you think of the data and what you think of a potential market correction coming up. Sign up if you want access to the trade alerts as well as the live streams that I do with our private trading group. If you want to buy the options course, that link is in the description below. Subscribe to the channel, hit that notification bell. Stay safe out there, traders. Peace.